Ayala Land has filed for the Philippines' first real estate investment trust. Ayala REIT will be the commercial REIT platform for Ayala Land. As a commercial REIT, a REIT will focus on expanding its office, mall, and hotel properties. The firm plans to raise an estimated 15.1 billion pesos in fresh capital by selling 49% of its stake. Here's a summary of the key terms of the offer. The price is set at 27 pesos per share, up to 456 million shares. 70% will be offered to institutional buyers, 20% to trading participants, and 10% to local small investors. It also provides for an over-allotment option of up to 45 million secondary shares. Post-offer, the public float will be 49%. The offer is valued at 14 billion pesos, and 15 billion pesos assuming full exercise of the option. The estimated market cap, post the offer, is up to 31 billion pesos, to be listed with the PSE, with the ticker symbol AREIT. BPI Capital is the sole issue manager, sole book runner, and land underwriter. The public offer period will run from July 27th to 3rd August 2020, and will debut on the PSE on August 13th. 90% of its IPO proceeds will be used by parent firm Ayala Land to reinvest into its real estate projects. Ayala Land is divesting 3 office buildings in Makati Central Business District for its REIT initiative. These include Ayala North Exchange, Solaris One, and McKinley Exchange, which have a combined gross leasable area of 153,000 square meters. First is Solaris One. Solaris One is one of the pioneer BPO facilities in the country, when the BPO industry was just beginning in the Philippines. It is a 24-story building located along De La Rosa Street in Makati, and was completed in 2008. HESA accredited. It has 466.26.57 square meters of gross leasable area, with market valuation of 12.054 billion pesos. Committed occupancy rate of 100%. Net property income is forecast to reach 232 million pesos for 2020. Its tenants is composed primarily of multinational corporations, of which approximately 90% of tenants involved in BPO services. Some of the tenants include Shell Shared Services Asia, ANZ Global Services and Operations, Institutional Shareholders Services Incorporated, Alveo Land Corporation, and Bank of the Philippine Islands. Second is Ayala North Exchange. Ayala North Exchange was purchased by Ayala REIT on October 2018 from Ayala Land. This is the first mixed-use commercial development by Ayala Land, which consists of a 3-level retail podium, 2 office towers, and a service department on top of the office buildings. It is located along Ayala Avenue corner Salcedo and Amor Solo streets. HESA accredited. With a total gross leasable area of 95,500 square meters. With a market valuation of 16.026 billion pesos. Committed occupancy rate of 100%. And a net property income 2020 forecast of 250 million pesos. Its tenants are approximately 74% derived primarily of companies under banking, financial services, and BPO sectors. Some of the key tenants include Concentrix CVG Philippines Incorporated, Oracle NetSuite Incorporated, Bank of the Philippine Islands, Makati North Hotel Ventures, and Prulith Insurance Corporation of UK. And third is McKinley Exchange, located at the corner of EDSA and McKinley Road, a very prime spot adjacent to the Ayala MRT station. Completed in 2014, this property has office and some amenity retail formats at the ground floor. Early this year, Ayala REIT leased McKinley Exchange Corporate Center from Ayala Land. It is also PEZA accredited. 10,687 square meters of gross leasable area. Market valuation of 2.72 billion pesos. Committed occupancy rate of 100%. With a net property income forecast of 37 million pesos for 2020, 100% of its tenants is focused on the BPO industry and leased mostly by TELUS International Philippines. And to expand Ayala REIT's built-in portfolio, it will acquire from Ayala Land in October 2020 for 1.45 billion pesos, the fourth property, Teleperformance Cebu. Teleperformance Cebu is a 13-story mixed-use Grade A-rated building, with retail areas and entertainment facilities on its second floor. Teleperformance Cebu is strategically located within Cebu IT Park at Villa Street, Asiatown IT Park, Cebu City, the premier central business district of Cebu. It is also PEZA accredited. 179.47.96 square meters of total gross leasable area. Acquired value of 1.45 billion pesos. And a net property income forecast of 26 million pesos for 2020. It has a single tenant in its office space, Teleperformance, a pioneer in the BPO industry. The addition of Teleperformance Cebu to the portfolio will increase the REIT's gross leasable area by 11.7% or 171,000 square meters in total. After the IPO, the public will own 49% of REIT, while Ayala Land will remain control of 51%. This gives Ayala Land enough control to infuse more assets for the future growth of REIT. Working closely with Ayala Land, REIT engages the services of the fund and property management companies, which are both wholly owned subsidiaries of Ayala Land. REIT fund managers' main responsibilities are to implement investment strategies and manage the assets and liabilities with a focus on generating steady rental income and increasing the company's assets to enhance the returns from the investments and the distributions to shareholders. The REIT property managers performs the day-to-day property management functions of the properties. These functions include managing the execution of new leases and renewing or replacing expiring leases, as well as the marketing and promotion of the properties. Here are some key figures at a glance. Ayala REIT's portfolio contains well-established commercial properties with quality tenant space, long leases, and stable cash flow. With the addition of Teleperformance Cebu and other high-quality assets over time, REIT's revenues will grow significantly, providing the company with the ability to increase dividends in the long term. All the properties provide stable recurring income and steady inflation hedge dividends. This is evidenced by its dividend distributions and net income in the past 4 years. Thank you for watching. Please leave a like, and don't forget to subscribe.